Good afternoon, everyone, and welcome to the second day of ETAuto EV Conclave 2022. This is Shruti Mishra, and the topic of today's panel discussion is smart ownership. Now, while rising fuel prices are sparking a renewed interest in EVs, customers lining up for these products are facing financing hiccups as the established auto financiers are simply shying away from financing EVs because of their no resale value. EV buyers currently face a range of financing challenges, and these challenges will only intensify as and when EV adoption picks up in the country. The quantum of capital and financing required, whether it be in terms of purchase, ecosystem development, or leasing for India's EV future is significant. Now, to understand the key requirements of smart financing tools needed to realize the smart ownership, we are joined by some prominent voices of this industry. So allow me to welcome our panelists. We have Mr. Sumit Aggarwal, CEO and founder of RevFin. We are also joined by Mr. Sumit Chhazed, CEO of Auto Capital, and Mr. Saurav Kumar, founder and CEO of Euler Motors. Hello, panelists. A very warm welcome to the event.
Hi.
Hi, Shruti. Thanks for the invite.
All right. So let me first begin by asking, I'll first quote the year-old report of ETAuto, which stated that the EV financing industry in India will be, by 2030, it will reach to the size of 3.7 lakh crore. Now, at this point of time, when we are seeing that buyers are interested in buying the vehicles, we are seeing many manufacturers are lining up their product portfolios, and they are coming when startups are coming up in this field. Why is it still tough for the individual to get the financing? And I'll first start with Sumit and Samir, because you two are doing some commendable jobs in this direction, but we still feel that there is something needs to be done. So Samir, I'll first start with you.
Sure. Hi, everyone. So I think from my perspective, it's very simple. Everything is quite new in the EV sector, right? The people who are building the EV products are new. People who are buying EV products are generally new to driving. A lot of them are very new to driving. The products are untested, technologies are untested, unproven. Battery technologies are yet to be proven over a longer period of time. And finally, from a lender's perspective, the resale value is unproven. And I think so. Those are some of the basic reasons why lenders generally try to, or lenders are actually staying away from this segment. I think having said all of that, the reality is that ultimately, you quoted a report by ETAuto which looks at a $50 billion business by 2030. And frankly, there are other reports that would probably say that that opportunity is much larger. And that's the way we see it. I think we think of it as a huge sort of opportunity. Yes, there will be teething issues. Yes, there will be issues with vehicles. But ultimately, if we are able to build effective ecosystem partnerships with manufacturers, with fleet operators, with charging providers, with insurance companies, with IoT device companies, I believe we can create an ecosystem that works for everybody, where the driver and the vehicle remains roadworthy most of the times. And also, I think finally, from a risk perspective, I also believe that everybody in the ecosystem has to participate in sharing that risk, right? Because ultimately, from a financier's perspective, financiers have to take on the credit risk that the consumer brings in. But there is certainly a risk of the product as well, which can be shared with the OEMs and fleet operators and so on and so forth. And I think everybody who is operating in this ecosystem understands that, realizes that, and they're all working towards that same goal. Ultimate objective is to expand the market. And I think, frankly, our experience has been extremely good in this segment, in the EV segment, especially on the commercial side. Very good experience with not only drivers and the repayments, but also very good experience with manufacturers, fleet operators, etc.
Now, Samir, you highlighted that there is a need of partnerships. But when we talk about the EV space, And you said that the OEMs need to partner with the financiers to make this process more streamlined. But if we talk about the companies OEMs that are present in this space, that is Bajaj, that is Hero, they are relying more on their own captive financing. Mahindra, they have their own captive financing companies. Now, at this point of time, I just wanted to understand that is there really a willingness by the OEMs to come forward and go beyond their set of financing arm that they have and opt for something new, or some new startups which are operating in this space? How willing are
So
they?
I'll say, so I'll make 2-3 points. First of all, not everybody has a captive financing unit, right? And because there are a lot of startups coming into this space as well, they certainly don't have the captive finance unit. So I think there's a huge opportunity. That's point one. Second, I'm going to say something very controversial now. I don't believe that captive finance units are also ready at this stage to finance electric vehicles manufactured by their same brand OEMs.
And if you can elaborate on this, like if
how, as I said, ultimately, see, captive finance units are were basically built many years back for certain products, and they work with those products with that distribution model, etc. EV does not work like a traditional automobile, right? The product is different, product nuances are different, product amortization schedule is very different. A typical product, basically the depreciation just keeps coming down, whereas with EV it comes down, and then the moment you replace the battery, it goes up and comes down. So nobody actually knows what the real depreciation curve is going to look like, right? So in a way, a lot of the captive finance units are very, they are like traditional finance companies. They need to remold themselves to understand the EV product, take on certain risks, also understand technology, right? So I'll give you an example. Most electric vehicles, since you started with the word smart ownership, are smart vehicles. They're connected vehicles with IoT devices. We as an organization use a lot of IoT data to make decisions and to manage our customers. So, and I'm not sure traditional finance companies are at this point in time ready to get there. Right? So I think they also require to evolve themselves. And I'll be honest, we've spoken to most captive finance companies now to partner with them to finance products of their branded OEMs.
All right. So Sumit, my question is to you now, that what's your view on the captive financing situation in the country right now? What's your take on that? Do you still feel that they are not capable enough of financing the new age vehicle? And my second question is that, as mentioned by Sumit mentioned, that they are making use of IoT devices. And many of the startups right now, which are coming in the financing field, they are actually making use of AIs and MIs. So what technologies Auto Capital is leveraging to make this process more pro customers, like more and more customers can join this? Because the space in which we are operating right now, the EVs are scaling right now, is majorly 3-wheeler and 2-wheeler, and most of them are first-time buyers. So how are you implementing these technologies in your process?
Thanks, Shruti, for the question. So I'll start with the EV is bringing a transformation to this industry, right? So whether it's how the vehicle was manufactured, whether it's how the vehicles are financed, whether it's how vehicles are sold, right? Everything's seeing a change happening, right? So you see everything is kind of getting disrupted and getting re-innovated, right? Because that's the kind of a change that this technology is bringing, which I would say happens once in a century to any category or any industry. So it's a very welcome change, and that also opens up opportunities and its own challenges when such things occur, right? Now, a few things to answer here. One, to say, see, there will be always financing needs, and brands, as Sumit mentioned, very much agreed that every OEM generally never have a captive financing arm. It's always been like a couple of 3-4 big players who had their financing arms, and everyone else has pretty much dependent on independent financial institutions. So there is enough market opportunity between captive and non-captive players to work around here. Second, even with the captive financing arms, as this industry is seeing a change, startups with innovation, startups with more technology age can build a better product or build a financing product or ownership plans which will be acting or which will prove for customer to be more smart than the plans that are available from the captive financing. So as a customer, he would definitely have better choice to make his ownership smart. Right. So that's the first way to take it. Like while there will be financing arms of captive consumptions, but what will matter here as the technology is seeing a big shift, who will provide a better option to the customer of ownership. So that's the one part. Right. Now, second, what we're doing at Auto, obviously, we always have been challenging the way the consumer buy, finance, and own the two-wheeler. So start from this first point itself. Like today's generation, where like people are buying, sitting at comfort from everything, from a small buying of a bouquet to buying an iPhone, people are doing from home. So why can't they buy a two-wheeler sitting at a comfort of home? So we're starting the disruption from the first leg itself, where can we redefine the way consumer discover a two-wheeler? Can we redefine the way consumer test ride a vehicle? And can we redefine the way how a consumer buys a vehicle? Right. So we're starting at Auto. We are completely disrupting the whole experience of buying and discovery through technology. The second leg comes is financing. We have always seen that, and it's a data from the industry again. Today, almost 70% people opt for financing. That's a huge number. In 2010, roughly, it was around 35-38%. It's almost doubled up in last 10 years, and it's attributed to the increase in the prices of the vehicles. It's attributed to the new age consumers who buy vehicle. I don't want to invest their own capital in. It's a investment which it depreciates. Right? People don't want to make that kind of investment. People want to have access to capital from the institutions to do that. So that's been a huge demand of money in the market. Plus, the consumer behavior today is he likes to change fast. People are changing vehicles after 2 years, 3 years, 4 years. That's a interesting phenomena. I'll say interesting behavioral shift that we have seen in India in last 1 decade. It was not the same. People used to keep the same vehicle for 6-7 years. Like my father used to have a Bajaj scooter. He used it for almost 13 years in his life, and then he bought another motorcycle which he has been using for last 7 years, and then he shifted to car. So the period has changed. Today, like I'm already on my third car in 5 years of life cycle. So this has been a shift across the consumer of the new age in India, and we think ownership has to evolve. The plans of financing, the options of financing, the options of buying has to evolve with the need of the consumer, and that's what we are driving at Auto. We enable customer options where sitting at comfort of home, buy a vehicle of your choice, do a test ride at sitting at home or office, and then get a vehicle which you can keep upgrading after 12 months, 24 months, or 36 months. Now that's what gives customer a flexibility and also make him feel smart. I don't need to worry too much with the commitment that comes with buying a vehicle. I own it in a way which I want. And that's something which is radical, which is kind of a very different take on how a vehicle is being bought and financed in the market. Right? So that's what we are doing. And there is interesting use of technology at every stage, right? So as many of these customers are new to credit, but everyone is today on various payment options. Like people are using UPIs, people are using credit cards. Can you underwrite a customer using some of his social details, some of his transaction details on various alternate payment modes? Like, can you do that? Like, can you understand a customer better? Because then you build a much more ease of access to finance to larger set of consumers. Can you do that? Right. But similarly, with EV coming in, the technology is there in the asset, right? It was never there before. In IC, you had no clue what's happening with the vehicle. Now you have so much data on the vehicle. And as somebody mentioned, can you leverage some of the data points to build a much better financing product for the customer? So I think there's many interesting steps that we have taken at our end, and that also enabled us to open a financing option to a larger base of consumers, which didn't happen before. Right today, we can probably share that 30% of our portfolio is electric vehicles. We have been one of the kind of front leaders with RevFin in this market. Right, we have enabled financing at every consumers, and selection of brand becomes important. And work with right set of brands where there is a comfort on the quality of the product, and then give customer the easiest experience of buying and financing, and then he will be yours.
So Sumit, with your financing options that you mentioned, what set of customers you are targeting? Whether those are the tier ones or they live in tier twos, tier threes. What is the range of the customers that you are targeting with these flexible options?
So, see, again, we opened it for every customer who wants to buy a two-wheeler. So we are not limited to it. But interestingly, what we've seen in last 3.5 years of data points, and roughly last 2 years, especially in the EV market, young age group customers, especially in the age group of 23 to 35, they are the customers who are coming to use or buy vehicle through auto plans. So that's I'll say a millennial and Z generation customers who are coming and buying the vehicles or the electric vehicles on the platform. Most of them are salaried and educated, which also shows that there is some level of awareness and understanding that buying in today's world, buying a IC vehicle is a costly affair in the long term. It's also somewhere against the climate part of it. So the customers are progressive, are understanding, they understand the concerns, and they understand concerns from both point of view. From a personal financing point of view, it doesn't make sense to own a IC vehicle today in the market, and at the same time, it's also socially, it's also negative impacting. So we have seen very interesting set of customers coming to us. Profile ranges from tier 1 profiles to semi-skilled profiles to unskilled profiles. The different set of profiles of customers are coming and using the platform to buy. We are definitely seeing a real surge in inquiries in the last 6 months. Like from just to share with you, we were roughly used to get around 25,000 to 30,000 users on our platform inquiring on a month-on-month basis. Today it has come up to 150,000 users on a month-on-month basis. So it's like a 6x growth what we have seen in last 6 to 9 months of time, and that is also attributed to the real burst that has come after launch of Ola, after launch of Bounce, now Hero launching their own product, other brands are in pipeline. So as the I would say the established brands start talking about a technology, about a product, it really builds confidence in the regular or mass market to kind of start adopting it. And I think this year is that year for change, where we will see a lot of scale happening even in the mass market to kind of buy EV, which is a very good shift. And young progressive customers are the most ones. And the second set of TG who comes to us is definitely the last mile logistic brands, partners and companies where consumer essentially is using this vehicle for making money. And for them, the overall cost of ownership over time makes a lot of difference, like how much I'm spending on riding every kilometer. And for them, the EV makes a lot of sense. So that category is definitely interesting. But unfortunately, that is one category that is always, I'll say, declined for capital, right? Financing inclusion is definitely a worry for them. So we are also working with various last mile logistic partners to kind of enable such kind of community and riders as well to own a EV vehicle for themselves and make a much better life for them.
Exactly. Now, talking about the last mile logistics, Saurav, your company Euler is manufacturing the three-wheeler commercial cargos, and recently they have launched. Correct me if I'm wrong. The high load in the month of October 2021.
Yes.
So now, despite manufacturers' frequent pronouncements proclaiming EVs as the future of mobility, many dealers are still unable to enter into the EV space, EV business. Now, from a manufacturer perspective, I just want to understand that how far do you think that financing is the major hurdles, is the major roadblock for the dealer, and do you think that there is something beyond financing that needs to be addressed in order to make dealers or the retailers to come forward and opt for this EV business? What needs to be done in this direction?
Thanks for having me, Shruti. So over last 3 to 4 years, now that 4 years Euler have been in the picture. So first couple of years we have been trying to understand what is a good product that India requires. So basically building a product from a business end use case, like what a customer drives, what is the payload, what is the range, what is the top speed. So we are in the commercial vehicle, so those are the parameters that we typically look at, right? I mean, while acceleration and top speed, those are the other parameters, but for us it's mainly these vehicles are utilized on day to day, and it is about earnability that the customer gets out of these vehicles. So first thing that we realized that here, if you have to build a vehicle that withstands the same kind of India challenges that other commercial vehicles have in ICE, diesel, petrol have been built, you have the prices of these vehicles will be higher than a typical ICE engine vehicle. If your prices are similar, probably the performance are going to be inferior. So Euler understood that over the last 3 or 4 years of the journey, and today our vehicle in terms of spec beats every IC engine vehicle out there in terms of performance, whether it's the payload capacity, whether it's the range, whether it's the inclination that incline. And the reason we have done that is because at the end of the day, let's just say a driver, single driver entrepreneur or a fleet owner, they are buying these vehicles to be used by the end customer who is going to overload, who is going to not wait if it's raining, there's a waterlogged street. So the vehicle has to be built for that India condition, right? Now, when we built that vehicle, so first couple of years, the transition was a bit slow, not only because of financing, there was not also good availability of good product. And I think now, I think that while we've understood, we have launched that product when we were very, very certain that this is the product that will meet all the requirements. We are working with all the financiers. I was listening to the conversation with what Samir was saying and Sumit was saying. I think they're absolutely right on that entire partnership part. I don't think one party alone can do the entire transition. It has to be an ecosystem play. Like we depend on all the partnerships, whether it's from service station partner, charging station partner, financial partners. There is obviously some we have done in all of the aspect, right? Like when we started, we also did equity financing of the vehicle. That's not the smart way to do it, but we did it to basically get to a point where we are right about the we believe this is the product that if a financier finances it, they will not face a secondary value problem after 5 years, right? I mean, that's the conviction we as an OEM need to have. We also went ahead and built charging station, but those were not the reasons that we want to go and own all of the space. So there was a point around captive financing. I think and I think that was very beautifully addressed that I don't think any OEM can do the entire market. It's very, very large market. And traditionally, the reason you have all the other banks existing in the market in their commercial domain is that primarily not all OEM can service all the demand that is there, and there has to be a greater partnership around. The challenges around EV was mainly that there was a technology risk. I mean, there is all kinds of battery pack. There's LFP, there is NMC, NCA, there's air cooling, liquid cooling. Which one is good? Which one will make 5 year of even OEM were struggling to answer that question. The reason why I'm saying this, Shruti, is we have been doing this for 4 years, and there is this is the only business we do. We have no IC, petrol, diesel, CNG, any other business. And while we are doing this all day and night and only this thing, we are still trying to understand and update and continuously put the best product out, right? We have a liquid cooled NCM battery pack today, one of the best. We are the one of the only OEM in commercial vehicle to have a liquid cool. The reason for doing that is so that battery should last up till 5 years, so that if let's just say RevFin or Auto Capital is financing a vehicle for 3 years, 4 years, then at least that customer should get an additional 1 to 2 year to make additional revenue, put the vehicle in secondary market, and so that that whole cycle can sort of go on, right? So some of these investment on the technology side has to be done by the OEM. It cannot be a financing play alone. But at the same time, the problem that has happened is because you made a similar performing vehicle, your cost of vehicle are higher. Because of the technology risk and the overall vehicle utilization, all of these risks leading to a lower secondary value or risk around that, the IRRs and some of the down payments have become a bit higher than the traditional market rates that existed for ICA. Combined of these two has led to some challenges in terms of where an end customer finds it very difficult to buy the vehicle and justify the entire cost, right? So this is where I think when your OEM and a partnership between an OEM, a financer, and the end customer. I think those would be the first one that I believe that will transition. And the reason behind is there is also beauty of electric. While there is all of the challenges, the beauty that electric vehicle bring is you have a lot of data available, which was not available from today. If you buy a three-wheeler cargo diesel vehicle, you don't know the utilization of vehicle on a day-to-day basis. You don't know how many kilometers they are doing in a day. You know if they have not paid the EMI at the end of the month or at the end of the second month, and that's when you start raising a lot of flag. There is certainty about ICE vehicle secondary value and some of that, but what EV brings with that uncertainty is some good parts, and those are like a lot of understanding around whether this person who is bought the vehicle, can they service my EMI in this month or not, and those positive things can be used to bring down the cost of IRR. So yes, your challenges, you were asking what is the financing the only challenge? I don't think financing is the only challenge. Product is also like a part of that. Some of the businesses on the other side, right, who are using these vehicle, they also have to understand like when they are going to utilize this vehicle, what kind of fundability will they be able to provide? Will they be using it for 3 to 4 years, so that there is comfort on the financer side? So so first, I think all of us together need, and we have done this. There is a couple of partnerships recently we announced. One of them was with Three Wheels United, where there is that larger sort of, there is end customer, there's OEM, and then and financer coming together and solve. So I think a lot of these partnerships, when they starts to happen, it will start moving the transition forward. And as folks have said on the panel, I think they are bang on with that the year of EV is here. Like, I mean, the transition is already happening. It's not that there are smaller use cases, but it's that once you are in the picture, you are understanding different kind of challenges as well. These partnerships are being formed, and they are formed because these guys are also forward looking in their thought process. We are also, and hopefully this will grow to a much larger partnership.
So, Saurav, you mentioned about the ecosystem, overall ecosystem. Now, the predicted rapid growth in EVs will not happen if the electric charging infra does not expand at a similar rate. Now, when we look at the overall charging infrastructure in the country, it's really sparse. We don't find adequate amount of charging stations or swapping in stations in the country.
Mm-hmm.
Now, even Euler has correct me if I'm not wrong, that your company has installed a network of, I think, over 100 of charging stations in NCR, right?
Yeah, so we have a network 200 now fast
200.
chargers and 200 slow charger across 11 hubs in Delhi NCR. We
Right.
expanded to Bangalore recently. So like I said, so when we started, some financing we had to do, some product also we had to deploy. Almost 300 vehicle we ran for 3 years. We got 1.5 million kilometer data out of that. And then we also had to set up those charging stations. While at the same time, now we are partnering with a lot of charging station companies out there, whether it's in the middleware, whether it's the end provider of the charging station, or providing the entire solution. So Euler will continue to invest to move, because that's the only thing we do, and we fully believe in the electrification journey that India is on, and we will be the first company, if there is no one available to to electrify these vehicles on ground. But I believe that we alone will not be able to do it, and there is a requirement for charging station service, financing, all of us to come together and agree on taking some of the risks, so that all of us can move forward on the electrification journey.
And I feel you will be a better judge of this situation, because you are both on the manufacturing side as well as on the infrastructure side. So I just wanted to understand that that the inclination of financiers, do you find that is it more only towards the product side and not towards the infrastructure side? How do you see this situation? Because right now, okay, for product, we are very clear that we need financing. We need to finance the end consumer. But when we need to look at the cost of financing the infrastructure, the overall process is quite complex. You don't know what is the cash inflows and cash outflows. You really won't be able to predict. So do you think that at, in the present scenario, financiers are more willing to finance the product side, but they are not paying much attention towards the infrastructure side? What's your take on this?
So there are a couple of things. It would be incorrect to say that they don't look at it. I think most finance are also super smart. Like they understand all kinds of risks. The reason they are in business is to evaluate all kind of risk and do financing, right? So they understand all of this, and they draw a large amount of comfort in terms of the product being qualified from, let's just say, not just retail market, but also set of clients like Big Basket, Flipkart, Ecom Express, Udans of the world, who have tested it over 3-4 years. So there's some business amount of comfort, which gives comfort on the product side. Charging ecosystem also gives them comfort, but because our product are built on AC001 and DC001, so that AC001 means that most of these vehicles typically needs a 3-pin plug, which is available at home. So we have done that on the user experience side. All they need to do is 3-pin plug, and we give them a converter from 3-pin to a AC001, so that they don't have to only depend on Euler Motors charging station. They can also connect with any other AC001 plug that government had standardized in 2018. They can also charge it at home. So they have multiple charging options. We also have this charge on wheel, so that in case you are stuck somewhere in middle of the city and there's nothing around you, you just ping on the app. We will come to you and give you fast charging, and so that you can continue with the journey. So we have understood the charging ecosystem and infrastructure problem, but all of this is taking time. They will sort of, as cities, our government are planning more and more, sort of giving focus to on the charging station side, they will continue to come up. So every year, if you can see number of charging station being deployed or financing available, number of products that are coming in EV, they have been growing at a very, very high speed. Almost every OEM today announces an EV product or are on pipeline to add more and more if they have already announced one. So yeah.
So my next question is to Samir. Samir, currently, if we look at the portfolio of RevFin, RevFin is financing to the three-wheeler customer, cargo three-wheeler customers that is the major financing area. Now, when we talk about the overall infrastructures, do you have some plan to go with beyond the product to the infrastructure side? Are you tying up with any swapping stations firm or the battery charging station firm, or currently you are planning to stick to the product portfolio that you have originally?
Yeah, look, so I think first of all, what Saurav was saying is exactly right, that ultimately it's not so difficult to charge these vehicles. You can charge them at home. Right, and what we find in our experience is that drivers are actually quite comfortable charging these vehicles at home, because even the range on one charge is sufficient for them to kind of drive the vehicle the entire day. Right, so from that perspective, it's not very restrictive. Having said that, we are open to open to financing all sorts of products. We already actually have partnered with a couple of battery swapping and subscription providers. So we actually provide loans for battery subscriptions as well. Right. We've also considered actually financing charging stations, not the very high-end ones, but the sort of cheaper ones, which basically are used for just charging on the go and so on and so forth. I actually think that ultimately charging stations, etc., will come. We just need to start seeing the vehicles on the roads, and the charging stations will come. It's like a chicken and egg. And I actually foresee that someday maybe every kirana shop or every panwala will actually have a charging station where you just come and stop for 10 minutes, recharge your vehicle, and then continue your journey. And if that actually happens, then the charging stations itself will not be very expensive, and we're very happy to finance those stations as well as a secondary income provider to some small shopkeepers.
Actually, Samir, I was going through the RevFin profile and I was quite intrigued by seeing the description that your main target is the tier 2 and tier 3 customers. Now, if we talk about the financing, I would say the financing portfolio of those customers, many of them are, as I stated earlier, that many of them are first-time buyers. And if we look at the CIBIL score, which many financing companies, it's a barometer of financing before giving the capital to any of the borrowers. So their CIBIL scores are generally very low. So, and that too, you are operating on a three-wheeler side, electric three-wheeler side. So how actually are you managing your NPAs? Being a financer, this is what I really want to understand.
Sure. So first of all, 97% of our customers live in tier 2, tier 3 towns. 85% of our customers are first-time borrowers, which means there is no CIBIL score. And I'd like to draw a distinction between a low CIBIL score and a no CIBIL score, right? Low CIBIL scores is obviously not a very good thing, but not having one is not a bad thing. When you don't have, it's just that it's difficult for financiers to figure out how you will perform because you have no past performance. And then therefore, some alternate technique needs to be applied to understand that. So what we do as an organization is we use a few innovative techniques. So one of the things we do is we make every user go through a psychometric assessment. That psychometric assessment basically helps us understand a few personality traits about the user, and those have a direct correlation with intention to repay. Right. So this is a tool we've jointly built with IIT Kharagpur, and we are very confident that we're able to measure intention to repay very well upfront. And that helps us keep very high approval rates as well. As I said, 85% of our customers don't have any CIBIL scores or past credit history, but we are still able to approve over 70% of the people who apply.
Okay.
And we're able to keep our NPAs extremely low. You'll be shocked to hear our NPS numbers. In the last 4 years, we've never crossed 1%.
Mm-hmm.
In a segment that, it's a tier 2, tier 3 segment, it's
Exactly.
a bottom of the pyramid, uneducated, very low level of education, no CIBIL scores, no credit history. Even with that segment, because the intention is there to repay, we find borrowers pay really well.
Exactly. Now, Sumit, I just wanted to understand from you that currently, if we look at the EV financing situation in the country, the major problem that the buyers face is the short loan tenure, and another is their concern on the resale value of the vehicle. Now, I just wanted to understand that what else can be done, or what smart financing options can be added from the private sector to make this journey, this financing journey, more easy for the customer, to include ease of mind in the whole process of financing.
Right. So that's a very interesting question, because that's one area where there's not enough historical understanding or data to kind of determine things. But some of the points I would like to highlight also, which are where these things becomes important. Like EV is a new technology, right? And generally, at India, for users to adopt something, it takes time when it comes to a technology shift. Like we want to see, we don't want to be the first ones. Like we want to let someone do it and then see and then maybe follow it, right? So we are more of the followers when it comes to new technology adoption. So one of the area where we have seen that some of the brands which is associated with auto got benefit was that, considering with auto, the advantage for the customer, because the model of auto is built in a way where customer can decide to shift or upgrade a vehicle after 12 months, 24 months. They would actually create it as a USP for the customer, where the customer has a bit of hesitation to try an electric vehicle. They push it off and say, look, you have a feature from auto where you try it for 12 months. And maybe after 12 months, if you don't want to use it or you feel this product is not comfortable, you can definitely come back and go back to switch back to IC if you want to, right? But give it a shot for 12 months. It's the future. And if you love it, then continue paying the EMI and keep the vehicle. So I would say that feature itself has enabled many of our EV brand partners to do a better sale, because that builds a comfort in a large market space where technology is not best understood at the first place. And this becomes a very strong hook for them to kind of at least give it a shot. So that is something that has been an area of work for us. where we have been the kind of ones who have always believed in the model. And obviously building the model was not easy, considering you don't have historical understanding of how the electric vehicle will, the technology will play out, how reliable these vehicles will be, for how many years they will operate. But we have tried to build some modeling based on understanding of how Tesla performed in the markets of years when they launched, how the technology of EV has evolved in India in last 3-4 years, how the battery management systems and the battery technologies. So we have obviously done a bit of engineering efforts. While being a financier like Euler, we have to spend some time on the other side to stretch the brains, to understand the product and technology better, so that we can build options of financing which suits the demand of the customer. And hence we've been able to build some model around it. Obviously, time will tell how the things have evolved, but so far the learning has been really good, and there's been strong feedback from the market that the market consumers have loved it, and actually it helped in enhancing the confidence and then the sale of these vehicles. And second point, it also covers the second part of it, where considering the customer, the products now with the subsidies are getting better, but still receive, if you want to have a similar performing vehicle, the vehicles are 20-30% costlier than the IC vehicles, right? Now, for the same customer, the monthly payout becomes essentially, right, because sensitivity towards the cash flow is high. So the other point, what we've understood is that in a market for the similar performing vehicles, EV vehicle will generally cost you 20-30% more than the IC engine vehicle, right? That also means that the customer has to shell out a higher EMI if he wants a similar performing vehicle, and which can actually become a bit of a restraint point for the customer. Now, what happens with auto supernumerary plan, considering there is a certain resale value, or the understanding of the two-wheeler as an asset has been really done well by the company. We give customer an option to maybe pay basically 30% lower EMI. Now, this particular option makes sure that customer gets a EV vehicle of a similar performance at the similar EMI as what IC vehicle is coming for, or is able to afford for, right? So that also helps customer in making sure that he is not compromising on the technology, and is able to kind of get a much more cleaner option. So these are some of the areas where we've seen markets have seen constraints, and we have been trying to kind of challenge our.
My next question is to all three of you. When throughout this discussion, what we mentioned about EVs is the cost is the major concern, whether it be in the buying or is it the battery cost. Now, government is doing their part with FAME 2 subsidies in the side of manufacturing and for the customers as well, to tone down the cost of overall vehicles. Now, do you think that the cost of finance is also needs to be looked at from the government policy level, so as to not only motivate the lenders, but also the borrowers to switch to EVs? And I'll start with you, Saurav.
So at the government level, I think I remember even there was this panel in 2020, and there were folks from ETAuto, and I think I had mentioned at that time as well that we should accelerate at least by making electric vehicles a priority sector, and so that more and more banks and PSU, everybody is more motivated toward the segment. See, the thing is, it's not whoever comes first will win the entire opportunity. It's not like one OEM or one financier would come and rule the entire market. It's always going to be about partnerships. Everybody, once they put certain percentage of their risk toward, like, let's just say, electrifying the entire market, this will lead to a better feedback. Everybody will come and understand and will evolve their models better. And I think we heard about one or two models that Samir and Sumit were talking about. So from a government point of view, I think they're already pro EV. They have been putting a lot of policies, whether it's name, whether it's at the state level. So I've been hearing about different states coming with pro EV policy every now and then. Recently, we also announced discussion around the swapping in the finance minister's speech. So I think government is already pro. On the financing side, if they can make it a priority segment and they can offer, I think, some kind of incentives or even push the normal banks and NBFCs to do better, help them compensate. I think there was something I heard around Delhi government doing 5% subvention. So even those things accelerates. It does not have to be forever there, right? Like, I think everybody just need to see one cycle of financing happening, how the secondary market evolves, how is the risk of some of the technology risk stabilizing, product stabilizing. So everybody will see that as long as there is one cycle. And I've already seen the cycle, one of the cycle almost being feedback loop getting closed in some of these segments. So it's already moving. It's just that bit of support there on financing will definitely accelerate it.
Right. Samir, your take on this, because we are hearing about this priority sector lending in the area of two-wheeler NBFCs as well, NBFCs that are financing the two-wheeler loans. So they are also coming up, and they also propose to put this under the PSL. So do you think that RBI's priority sector lending has the potential to act as a catalyst?
Yeah, absolutely. I mean, this is a big problem, right? So every time we do a new partnership, the main sticking point is what is going to be the interest rate of the loan, right? And that's quite understandable. I think priority sector lending will happen very soon. That's my view. And frankly, even if it doesn't happen, then maybe some new scheme can be carved out that is specifically for electric vehicles. The World Bank and Niti Aayog have come together to build a big risk pool to do first loss guarantees. Right, I think it's a $300 million pool that they've built. So I think that will come into the market soon. Saurav mentioned about the subvention scheme. I think all those things are there. I think everybody realizes something needs to be done, and everybody's testing waters at the moment. And I do believe that at some stage, somebody, and hopefully the government, has to provide a big push that incentivizes people to start lending in this space. It has to happen. Otherwise, it will become very challenging. My cost of borrowing is so high that no matter how hard I try, I cannot reduce the interest rate to the end borrower. And my cost of borrowing is high because EV is seen as a perceived, or there's a huge perceived risk of financing electric vehicles, despite the fact that our NPAs are so low. Right, so we find it very difficult to convince our sort of lenders as well to reduce the interest rates.
Sumit, your take on this?
So some of the points are already covered by Saurav and Samir. Right? Few things I would like to add on here will be that one, more than priority sector lending, incentivizing the consumer to switch from IC to EV will create a interesting push in the market. Right? It's very much a consumer-driven segment. If you talk about two-wheeler especially, it's very much a consumer-driven category. And if a consumer starts believing in electric vehicles and start doing EV purchase, it's a big push. And I'll give an example. A very interesting trigger has been the rising prices of petrol. Right? So while it has no direct incentive to buy EV, but penalizing a customer to ride a IC engine vehicle because the petrol price has gone up, suddenly there is a lot of, I could see people in different age group of 40s, 45 talking about no more having a petrol vehicle because they could see just train going up from here. So I think addition to the moving into priority sector lending so that more financial institutions start supporting fintech startups and by themselves start doing this industry, what more the governments can do to kind of promote and push riders and the consumers to buy two-wheeler EVs, right? So for example, Delhi did it, right? Making mandatory for last mile logistic companies to use electric vehicle to a certain fraction is going to increase the demand. And it's a situation where if there's more demand, more brands will innovate. They will see cash flow churning. They will do more innovation to get the cost better, get the technology better, and that will again bring promotion in the industry of the vehicle purchase. So I think especially focus on how to increase or drive the demand in the consumer segment could be very interesting to kind of get this going at a better pace and seeing the cost coming down. And second would be definitely especially the announcement that came with the battery swapping. It will be interesting to see how the interoperability of the battery starts happening. It's still a question, and it's still an interesting area to work and I think that will open also a lot of new financing opportunities. Like maybe there are ways where battery subscriptions will work. There are ways where vehicle financing without battery will work. There are ways where charging such stations could be financed. So new models of financings will always come. Already we've seen many brands now approaching us to also work with them on certain of these new age options to finance different components of it and pieces of it. So that's also interesting because in a piece by piece manner, finally the vehicle ownership has to become affordable and easy. And I think all these are the steps to make it happen for the customer.
Exactly. Now, as we are running out of time, just a closing questions to all three of you. From the manufacturer side, we heard that we heard the main concerns that are there. From the financier sides, you explained it that what needs to be done to make the process more easy to the customers. But I just wanted to understand in the end that is there any certain point of time points that that customer, as a customer, I need to take care of while going ahead with the EV financing? What homework as a customer I need to do before going ahead or before asking before making a choice in the direction of EV financing? I'll start with you, Samir, and then Saurav, please share your thoughts.
No, I think it's I don't think there's one answer to that question, to be honest. It depends on what the intention behind the electric vehicle is. If you are buying it for personal use, I would suggest look at all the lenders, because there are a lot of options, to basically get finance. If it's on the commercial side, I would first suggest that do your research on the product, which vehicle you want to buy. I think that's the most critical, not only in terms of the product quality, but also in terms of after sales service, spares, etc. I think that's very, very critical to keep the vehicle roadworthy. I think once you've done that, and if it's a commercial vehicle, you should go with the fastest option, and RevFin is the fastest option, so you should go for RevFin.
Saurav, you take on this.
I don't think there should be a question about electric vehicle. I mean, we are in commercial vehicle domain. I don't think, at least if you look at Euler vehicle, I mean, there's no electric IC or CNG, petrol, diesel, any variant of vehicle that can compete with what Euler has built. We are a bit costlier because of that also, but that's also because we focused on making a good product that can last 5 years, 7 years. Servicing everything that Samir mentioned, it is important, and as we are expanding, we are doubling down on all of those efforts as well. I think one of the things in commercial vehicle that I have understood, and this is mainly after we have started selling the vehicle, the mindset of operating in, let's just say, an IC engine vehicle versus an EV, for instance, right? There's a bit of a behavioral change. They need to keep that in mind, that, for instance, these vehicles have to be charged. If they plug it in and they forgot to switch on the button and it's not charging, the vehicle is of not much of a use in the morning. It will take 3-4 hours. And that's why Euler, by the way, also built a fast charging option, that in 15 minutes at our station, you can get 50 kilometers of charge for all these kind of challenges. But at the end of the day, they have to be bit more careful with that. It's not like you can just add a fuel very quickly in 2 minutes and then go running. So we have seen some of that, and we are also trying to resolve that with software. So we started sending notification if we believe they're not charging, but then there is also a point where you can do that, especially for a larger fleet owner. It's not the owner who is using the vehicle, it's like some hub manager or these hub ground guys who are operating these vehicles. So those mindset also need to be understood. But see, all of this, Shruti, is mainly because we are in the early days of electrification happening, and once this becomes norm, people will know what to do. It's not that in commercial vehicle people keep their tanks empty in the morning. They keep it filled, and they have understood that over a time that otherwise you run out of fuel, you'll have to carry that. So mainly to the I don't.
Simply, scalability will give more clarity about how to proceed in this direction.
Yeah, but there is no question about using ICE or electric. I don't think, if you're in commercial vehicle, the utilization of these vehicles are so much, and the fuel prices that Sumit also mentioned briefly, that it's going up. I mean, it's only going to, that differential is only going to increase. And if you're utilizing these vehicles almost 100 kilometers on a day-to-day basis, I don't don't think there is a better alternative to EVs.
All right. Sumit, your closing comments.
So I think, as Arjun mentioned, and that's why the reason we all are in this panel, EV is the future, and we all are stakeholders who wants to contribute in this moment. Definitely, the final user is the customer, the end customer, and I think for him, both things are very important. Understanding of which vehicle to buy, based on his use case, based on his needs. I think more right now, since the technology is new, he needs to put more efforts and understanding to find the right vehicle for himself. Because there, see, while it's an interesting opportunity, but then also you see it's a curse because we have 60 plus brands now in India selling electric two-wheelers. Like, similarly, I think Saurav will have a few multiple new players trying to come in the market, and at times it becomes a bit confusing for the customer to figure out and make sure that whether he's buying from the right brand. So I think the selection of the right brand makes a lot of difference here, because the technology is new, the product that are stable, the products that gives you a long-term service confidence and have a right battery management systems and battery longevity are going to give you comfort of having a right EV choice. And then second definitely comes financing, where it's about getting a right partner. Obviously, right now I would say, so generally the customers are devoid of much choices here. That's why we are having this discussion that more and more institutions should jump in and provide that option to the customer. But I think from financing point of view, three things matters. What is your investment upfront into it? What are your rate of interest and what is the tenure? So I think customer needs to make a choice which fits the bill for him in the best way. And again, in both of the cases, considering it's a new product, new financing options, at Auto, we are happy to help him, even in figuring out the best bike for him. That's we help. It's just an initiative, because knowing there's so many companies and chaos, we want to make sure that the customer makes the right decision of which vehicle, which two-wheeler is best for him. We are happy to help through our expert team to make the right choice, and then happy to serve him through financing option if he needs. But I think these both are important, and or selecting the right brand is more important at this point, considering technology is new.
Absolutely. Now, this brings us to the end of this discussion. Thanks to all the panelists for this insightful session. Thank you. Pleasure talking to you all.
Thank you very much, Shruti.